I think one of our primary claims to fame is the fact that we have the largest treasure trove of self-mined Bitcoin on our balance sheet. So we've got over 3,000 Bitcoin on balance sheet that we've mined ourselves through our operations right here in Canada in Alberta.
Jamie, I was, when I was going through your how the business works and that kind of thing, I was struck by the fact that you had these trailers full of computers and air conditioners to keep the computers cool. And you purchased these computers from a company called Bitfury, which you have a relationship with. They are a shareholder in the company. I always wonder, this is an area that's moving so fast. How does HUD 8 stay competitive in this world when there's always new and faster computer chips and, developing? How do you manage that risk in terms of tying up that much capital in these massive trailers mining all this Bitcoin?
Yeah, so great question. They are container-based data centers, so we don't. They're not on wheels. They're actually fixed containers. Each container has a capacity of about 1.1 megawatts, and then has historically we've used a mix of ASIC equipment. So we've been lucky enough to be around since late 2017. So we've been through the last peak cycle and then through crypto winter, and obviously now enjoying another bull market. The the ASIC equipment, we started off with Bitfury. So we have our oldest generation of Bitfury equipment. Then we have a middle generation of Bitfury equipment that's about 2 years old. And then most recently, we've been purchasing equipment from MicroBT over the last 6 months, and we have more equipment coming in from them over the next 3 or 4 months. And then about 4 weeks ago, we made an announcement that we had made an investment in GPU cards from NVIDIA. So this will mark the first pivot for us into actually mining on the Ethereum network. So even though we are hodlers of Bitcoin, this optionality for us to start mining using the GPU network, which is less power intensive, it brings a new type of optionality to us. And we actually can settle in the currency of our choice directly out of the pool that we're in through a partnership with Luxor. So originally we will actually mine the Ethereum network, but settle in Bitcoin. And again, just having that optionality for our equipment and our mining activities, we see as really important moving forward. And of course, it lets us tap into the momentum that we see continuing to build on the Ethereum network.
Now, Jamie, back to Bitcoin. As you know, it's getting more and more difficult to mine it as we get closer to that 21 million limit sometime in 2040, as Brian Mossoff was saying. So the so-called difficulty rate is going up, and you've even said that margins eventually start going down. So how reliant is HUD 8 on the price of Bitcoin continually going up?
Well, the last Bitcoin doesn't actually come into circulation until the year 2140. So I think we will generally be long dead by the time that happens. But what happens for the Bitcoin miners as far as revenues over time is transaction fees make up an increasing portion of the revenues that we actually make. So right now it's between 15 and 20% or so of our revenues come from transaction fees. But if you fast forward to the year 2140, all of the miners' revenues really would be coming from the transaction fees, as those block rewards would then fall off.
Right.
And we'll all be long gone by then.
Well, you never know what technological innovation can bring for us.
That's
so
true.
We may be existing in some sort of technological state, but in our current human form, highly unlikely.
You never know.
Speaking of technological innovation and the need for it for all of us to live a little bit longer, I know you're using 14 and 16 millimeter nanometer chips right now, and you've mentioned you're getting into the NVIDIA chips, and we're down to 7 nanometer chips. So, and that's what be more power efficient. And one of the complaints about Bitcoin is, to mine all the Bitcoin in the world, we're consuming about the equivalent of 80% of New York City's power consumption on an annual basis. What plans do you have to be able to use more renewables or become more efficient to start making the cost of your mining operations, which represents about 95% of your cost. What are you going to be able to do to drive those costs down so that you're able to smooth out some of the volatility of your mining transactions?
Well, certainly the pivot into the GPU mining side uses a lot less power, so that's another benefit to that, the optionality that we bring to the table with GPU mining coming on into the fleet later this spring and into the summer. And then we've also started to work really closely with another Canadian entity, Validus Power. We announced a power expansion project with them earlier this week. And what Validus Power specializes in is actually behind the fence mobile generation, where they are able to produce power from otherwise stranded, in some cases wasted energy. And so the ability for us to actually take our mining fleet and take it to an area that we can take advantage of gas that otherwise doesn't have a purpose today, we see as a really interesting area to continue to explore. And we certainly have a very large focus on building out our ESG pillars and our ESG narrative going forward.
Lastly, Jamie, you've said before that Hut 8, and you wouldn't have been at the company at this time, but got bitten during the one of those dreaded crypto winters. What is in place now in terms of downside protection to help Hut 8 ride out any sort of long-term downturn in the sector?
Well, again, I think the optionality that we've added to the portfolio with the GPU mining coming on board. We also have a portion of our business that's now hosting. So of our 109 megawatts, we use 9 megawatts for hosting. We announced earlier in January the opening of a yield account with Genesis. So we actually are able to earn yield from the Bitcoin that we hold on our balance sheet. And reflecting back on crypto winter, it was actually the Bitcoin on our balance sheet that helped us to survive as well as we did. We were able to use the Bitcoin as collateral to secure a loan, which we've subsequently been able to pay off in full. But that allowed us not to sell down our Bitcoin balance during those difficult times. And then we've been able to take advantage of, obviously, the appreciation of that balance during this bull market. So certainly the Bitcoin on balance sheet is core to our strategy. We've been hodling Bitcoin since long before Michael Saylor made it famous, and that's a key differentiator that will continue to be important to us.
There's that word again. Thanks a lot, Jamie. We appreciate your time today.
Thanks, Jamie.
Thanks for having me. Okay,
Jaime Leverton, CEO of Hut 8 Mining. Hodl, hodl, I've heard both, but anyway, it means hold. Anyway, so any concern about miners' models or Hut 8 models?
You know, it's really interesting as I was learning about Hut 8 and about the mining business. It's kind of like you've gone back to the old mining days where miners are increasingly having to aggregate their power, their computer power, to try to smooth out the ups and downs of their success rate in mining, and they're putting their mining operations into pools. So, you know, there was Lac mines, there was Dome mines, there was Hemlo gold mines. All of a sudden, it was American Barrick, and we're seeing this in the mining space as well. It's a very, very capital intensive, very fast burning capital intensive business. You need the best equipment to stay competitive. So size, scale, efficiency is going to be very important. And so I think the big thing to watch for in the mining space is, will there be consolidation? And that's really the area that I think you have to look at as an investment opportunity in the mining space.